Welcome back. You're watching the world of Midcaps on Bloomberg TV India. Let's get a quick check going as far as how markets have been panning out today. They've been recovering for most part of the day today. They're just down by nearly 0.3%. That's 27 points down now is what we're seeing on the Nifty. It's a much better compared to where we'd opened or started the day off at somewhere around 79.12, 79.10 is what we'd seen. The Sensex in the meantime still down 95 points is what we're seeing. There have been a whole slew of stocks that have been in focus as well. Let's get some mid-cap strategies from Mayuresh Joshi, fund manager at Angel Broking, who's joining me on the phone line as well. Mayuresh, before quick word on the market first. What's your reading of it?
Morning, Priyank.
Morning.
So clearly after the Fed statement that has come through, there are some lingering doubts on how global growth and how global demand will pan out. Okay. And you're obviously seeing that getting built into the markets. Add to that how corporate earnings will pan out and what happens with GST in particular. I think those are the key aspects to be looked at. So our own take is that the markets are probably getting locked up in a range. 8,200, 8,300 seems to be the upper end of the range for the market. 7,500, 7,600 on the lower end of the Nifty.
Okay, so that's as far as what we've been tracking in regard to the way the index has been panning out so far is what we've been seeing. But Mayuresh, from the mid-cap space, what are you looking at right now?
So Leo's stocks across sectors, Priyank, to be honest. So I think we're following up a bottom-up approach where we believe that the earnings growth should hold up over the next 4 to 6 quarters, to say the least. So we like a few stocks from the FMCG space. We do like a few stocks which are diversified mid-cap companies. And again, I think mid-cap cement generally as a theme is what we are liking.
Yeah, you've got some stocks like Bajaj Electrical that you've been focusing on closely, Mayuresh. What's your thought there?
So clearly, I think Bajaj Electrical is one story that we've been liking for a length of time, and it's the turnaround in the E&P segment, which has probably done wonders for Bajaj Electrical over the past quarter or so. Our own expectations is that the E&P will exhibit stronger growth in the quarters to come, and with the kind of order wins that it has got, I think execution would be a key, which we're very confident that they will be able to manage over the next 2 years, to say the least. Add to that, I think if you add the other two divisions, which is the lighting divisions and the consumer discretionary spending, I think that can show an improvement in terms of how consumer sentiments pan out in the second half of this fiscal. So our own take is that the company's top line is expected to grow on a CAGR basis of 11.5% over the next 2 years, close to 5,300 odd crores. We expect the company to actually post profits in FY17 to the tune of 125 odd crores against losses that it just posted, more or less to do with how the E&P segment has been performing. And clearly, even from a valuation perspective, I think it is looking extremely attractive at this price. So I think any declines in Bajaj Electrical becomes a very good opportunity for long-term investors to actually start nibbling into the stock. Our target stands at 341 over the next 12 to 15 months.
Okay, so that's as far as BL is concerned, is what we've been, Bajaj Electrical is concerned, is what we've been tracking there. But you've got LIC Housing as well on your radar, Mayuresh. What's your thought there?
So clearly, I think if you look at the housing finance space, Priyank, they have done exceptionally well even in times when the credit activity was not so great. So if you look at LIC's lending portfolio, the retail lending has been quite healthy at 18% in the quarter gone by. The NI has been much better with spreads holding up. And even if you look at the kind of decline in the funding cost, seeing the wholesale rates cool off and replacement of high-cost bank borrowing with bonds, that has definitely led to margin improvement. The yields have been pretty stable. The asset quality relatively has held on for LIC Housing Finance. The GNPAs, net NPAs stood at 0.6, 0.33. So clearly, I think in an interest rate scenario which is expected to go down over the next few quarters, LIC should benefit massively from a falling interest rate cycle. So clearly, I think even at the current valuations around 2 times price to book, we find LIC Housing to be an extremely lucrative investment opportunity within the NBFC space. Our target there stands at 570 over the next 12 to 15 months.
MJG Education is another one that you've been focusing on closely, Mayuresh. We've discussed this in the past as well. What are your thoughts?
So clearly, I think the stock has shown a good price moment from what we've spoken earlier. And again, I think our own take is that when we look at how the prospects for this company is going on, their tie-ups with the Hyderabad Education Institute, the government focus on the education sector, we believe that MJG Education can report a very strong top line and bottom line growth. Again, I think if you look at their business model, it's more to do with how Mumbai region has panned out for them and the schooling part. But again, I think within the coaching business itself, the government project business again gaining stream and other facets of business streams coming through, MJG Education can benefit humongous carefully in terms of how the Robomed project is going on. And as I mentioned, I think the Sri Gayatri Education tie-up in Hyderabad will have a huge impact as far as the margins are concerned for MJG Education. So clearly, I think this is one stock that we are liking within the education space. Our target there stands at 169 over the next 12 to 15 months.
All right, so that's as far as MJG Education is concerned. And Mayuresh, very quickly on Inox Wind as well.
So I've been liking this company for a length of time, and clearly if you look at how their model is moving and similar to the government focus within this sector, it's got a very decent order book of close to 12-20 megawatts. The order pipeline looks very strong in terms of sites under acquisition, and clearly if you look at their capex that they're doing in Madhya Pradesh, that is going to have a telling effect in how the margins will pan out for their company. So our own take is that the top line will grow impressively at a CAGR of 48% over the next 2 years based on how their capacity expansion is happening, their strong order book, and clearly I think the EBITDA margins would reflect similarly in that fashion. So 17.5-18% is what we believe the EBITDA margin should hold out to in FY17, with realizations coming through on a larger scale, no royalty payments happening from FY16 onwards. And clearly, from a valuation perspective, trades close to 12.5 times. It's very, very attractive at this point of time. So our take is that Inox Wind, based on all these factors, should do relatively better over the next 12 months. Our target there stands at 505 over the next 12 months.
All right, Mayuresh, always a pleasure talking to you. Thanks so much for joining us today and sharing your thoughts and perspective. But, staying with mid-caps, one stock that's been in focus today has been SKS Microfinance. Just pull up the counter for you. Remember, the same stock, it tanked on Friday.